Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Wednesday, September 11th, CPI day. Apart from the CPI, first, we are going to review the NBA 30-year mortgage because we are continuing seeing lower rates, 6.29, and that's actually insane because we are at levels not seen since February 2023. 6.18 right now at 6.29, and it's because of that, because we are still seeing applications 1.4, refinance index 757, but still refinance is still going up. But if we check the 3 year, we can see that obviously we are seeing an increase in people trying to refinance to lower rates, but this is still historically low, pretty low. So I guess people is waiting for sub 6 rates. But the most important piece of data today, it's the core inflation. In terms of headline, year over year, we got 2.5%, lower than the 2.9 and lower than expected, 2.6. We are approaching that 2% that the Fed is watching, and month over month as expected and as the previous one. The issue here is that the core inflation is still being stubborn. 3.2% is as the previous one and as expected, and we are seeing a little bit of an uptick of 0.3 as a little bit higher than expected and higher than the previous one. If we check the CPI details, we can see that shelter is still an issue with 0.5. We can see that transportation services is 0.9. And in general, services inflation is still upticking at 0.4 with 4.9 and adjusted for August. That's pretty much the issue here. So if we continue analyzing, we can see that housing is the real issue here. Housing, it's the most troubling among them because prices like groceries, gasoline have normalized. We can see here that eggs are 28%, but we can see that overall we are above below the 10% that we were a year ago. So we are seeing lower pricing, but housing is still the issue. Services, shelter, it's the big issue. So inflation is not yet completed. It's not yet end. We are not beat inflation yet. So what happened with the interest rate probabilities is that instead of the jumbo 50 basis points, markets and analysts are now pricing in more of 25 basis points with 87% probabilities, because obviously as inflation is slowly ticking higher, we are going to stay higher for longer. Instead of just cutting 50 basis points, we are going to slowly decrease with 25. That's why we moved probabilities from the 50 basis points here to the 25 basis points. So that's good for the increased fear of a jumbo 50 basis points from the Fed, but it's not good because we are going to see higher rates than before. Actually, yields are pushing higher. So let's go to the technical analysis. As I say, yields are pushing higher, and you can see a lot of stuff here. A lot of stuff. Why? Because we are seeing a huge range. We are still in this range that I told you yesterday. The opening gap, the new week opening gap is still down here, and we are holding. We are holding all these zones with a lot of volatility, a lot of V reversals, like today. This is the 15-minute chart in overall completely V reversal. Unbelievable volatility. And you can see VIX, it's 1% today up. Nvidia was causing, is basically the same as the Nasdaq. Nvidia today, it's just ripping faces, 4%. But let me just go through some of my ideas on some of my setups today, because I always try to show you good ideas, good setups that happen every single day. Like, for example, this one down here. This was the overnight. The London Open didn't happen yet, but we were at this zone that I was watching. This is the 15-minute fair value gap that was still applying throughout all the overnight. So this 15-minute fair value gap right here from yesterday, right below the pullback and the late spike to the upside, this was holding. And more than that, we have on the daily, let me just clear that, we have on the daily this volume imbalance. So this volume imbalance is going to be green in the chart that I'm going to show you right now. So let's go back to the 1 minute. This green area is that volume imbalance. And this green line is the consequent encroachment of that volume imbalance on the daily chart. So if you put together everything, we can see that we touched the consequent encroachment, the 50% retracement. We are in a higher time frame, 15-minute fair value gap, and we basically pushed. We did a displacement, and we can see here a volume imbalance also adding to the confidence of my trade. So basically, I always try to have these confluences, and my entry is in the candle, the lowest risk candle, that in this case, this one was the first one that tapped into the fair value gap. This one was the next one, and the next one was this one. So the lowest one that starts pushing the move, I put a limit order here, I put my stop down here for 8 points of risk. So we see the move, we see the displacement, the continuation. We can see that this is the lower model, this is the sell model, and then we can see some kind of push towards any kind of minor sell side, minor buy side liquidity. In this case, at 18,800, 80 points of trade with a lot of signatures, in this case, 2 signatures of bullish price action. So that trade was already before the London Open. Then during London, we tried to establish a range. We tried to hold this kind of 1 minute fair value gap once, twice, a third time. But the issue here was that we were building liquidity. And there was a very fair value gap that held price action until almost the open. So we were trying to push towards this liquidity until they finally, in this 5-minute order block, let me just show you because it's quite beautiful. This order block and this 1-minute order block were blocking, as you can see, the price action until finally they gave up. The algos squeeze the liquidity to the buy side, and that's the final setup before the open, before the news. The news happened, we squeeze to minor sell side liquidity, minor buy side liquidity, and we left open this buy side liquidity from yesterday's high. This was the candle that was the CPI candle. And as you can see, I have a daily consequent encroachment inverse fair value gap that we are in right now. Let me just move this. There's a lot of stuff here. This inverse fair value gap was the one that I was watching, and the consequent encroachment in here, it's what I'm showing you right now in this mark. So this mark was the consequent encroachment. This brown area was the actual inverse fair value gap. I always put the inverses in orange. So what happened here is that in the actual, let me just show you, in the actual 15-minute candle, I tracked this wick down here to find for a setup on the consequent encroachment of that excess. This premium array, this premium wick was not tapped, never tapped. So seeing the 1 minute that was trying to build, and we reclaim the daily fair value gap, and we reclaim this inverse, and we open a fair value gap, and we took this liquidity. Look at this. The 1 minute order block, I think this was institutions entry. This 1 minute order block was the first signature that I was confident with an inverse fair value gap that was run through, that another bullish fair value gap that was open, breakaway gap, entry on this candle. I put the limit here, then I saw this candle, I put the limit here, 14 points right below the candle of the order block, and then the liquidity hunt was this, but I decided to hold until yesterday's high. This was another 58 points. So 60 plus 80, it's 140 points today, almost 2,500 bucks. That's insane. And then I was not confident on the news. I was bearish because the fundamental side, but the price action was there. So we push higher, and this is the first signal of, okay, I'm not going to short this market, but this was a clear signal. This inverse fair value gap that was respected, and the first 1 minute fair value gap in the market, in the regular trading hours, was this one. We tapped the consequent encroachment. We couldn't break 1, 2, 3. A lot of bearish price action, a lot of bearish signals. You could have basically had an entry in these two order blocks. This was the opening price. This was a nice setup with stop up here. A lot of bearish price action, but we had a lot of confluences lower that we tried to clear. The first thing that I noticed is that this SMT, this smart money manipulation move on the NQ, we never did the lower. On the ES, we actually were selling off heavily. So I just waited and waited. We took the consequent encroachment on the imbalance, and we took pre-market lows that right here we continue, and look at where we bounced. We bounced again on the 15-minute fair value gap that we've been respecting yesterday and also today. This was an area of interest that was pretty good for structure. And then, as you can see, we look at this algo. This is just a lot of support from buying. Here, actually, the open interest, the cumulative delta was negative, but suddenly changed. And look at the change in the behavior of price action. So the key was to understand that this consequent encroachment was the first signature of a bullish entry after the model of sell, the sell model, then the buy model. And as you can see, we completed the V reversal. There were a couple of good entries like this one, and also this order block here offering support here for an entry and continuation higher. We had a lot of buy side liquidity here that we ran through. And where are we right now? We are below opening price. We cannot sustain price action above opening price, and we are basically flat. We are flat. So that's why when we have to zoom out again and see what is being respected and what is not being respected. Let me just clean a little bit. After I already explained you my annotations, I will just clean a lot of this stuff that was already useful for now. So this can be moved. This can be moved. The liquidity, just bear with me a bit. Let me just clean my chart a bit. I'm doing this right now because I want to show you something pretty interesting that you would understand for tomorrow PPI. So 5 minutes, this was the second move. Okay. So basically, we have two consequent encroachment being respected. The daily inverse, it's as you can see, it's gone. We are through that. We used that, we lost that, we bounce from a key level, and we are above all these imbalances. We are above the consequent encroachment on the week of the week in the 15-minute chart. So this is bullish. We are above the volume imbalance consequent encroachment on the daily. This is bullish. And we are over the inverse consequent encroachment. We are up here. So this is certainly some kind of deep buy-in from big institutions, but we are still right now, we cannot sustain price action above the opening price. That's really the issue here. The ES, it's also showing you an SMT. This is inverse correlation. This is not correlating a price action because Nvidia is basically pushing the Nasdaq. So we have to really be patient for tomorrow or really wait for, I think, honestly, that we are going to this week run this liquidity up here. If not today, we are going to see tomorrow on the PPI some kind of setup. There's a lot of B reversals, a lot of sustained price action and bullish signatures in higher timeframes. And there's a lot of liquidity up here resting in the buy side. So I think tomorrow or Friday, we are going to see higher pricing. Today, it's not clear because we got the V reversal, but we are still trying, we are dealing with the opening price. And that's the only thing that is, it's concerning me. The Russell is not super strong. It completed the deep buying. The banks are deep in the red. Actually, XLF is minus 1.42. I'm concerned about the small caps, the banks, and also the amount of weakness in the RSP, in the overall market. So basically, I'm not super confident. We are holding key levels that were important today for sustain bullish action, or at least have some kind of signatures being written in the price action. And that's what I'm seeing. But if we, for example, start to see lower and we start losing the consequent encroachment on the inverse fair value gap on the daily, we lose also the volume imbalance. That would mean that maybe we are going to see bigger issues. But I'm confident that if not today, I think tomorrow or after tomorrow, this week for sure, we are going to see these levels being taken and this liquidity being taken. The CPI was not good, was not bad either. It's a mixed sentiment. The issue might happen, the sentiment might be caused about financials not doing pretty good and Russell 2000 being hit today. But NVIDIA is so strong that it's mixing signals here and there. So it's a tricky day today. It's a hard day, and that's why I want to really see the close today. We got this knife, this V reversal heavily. It's quite notorious. So I think we might see some business this week to the upside. After seeing today's price action, I'm still bullish. I have a little bit of concern. I'm not super confident, but I'm still bullish. This is just technical reasons. Fundamental side, CPI was not great, but price action is keen, and I will be certainly bullish for tomorrow and after. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Thank you for the views. Thank you for the support and the subscribers. I'm doing this for you. I'm doing this right now for me, but also sharing this with you because I really like to show you how to approach these markets, how my strategy works, how really price action shows you key signatures that you can take advantage of. And if you are a day trader, you can certainly take some of these opportunities. Discipline, patience, and risk management are still key for your success. Without those, you are done. This is really hard, guys. So if you want to dedicate yourself to this industry, take it serious. Stay safe, everyone, and see you tomorrow.